Hey everyone, welcome back to the channel. If you're new here, we're Investment IQ Insights and we're all about helping you achieve financial freedom. Today, we're diving into 3 ultra-safe, high-yield dividend stocks that can pave your road to riches. Before we get started, make sure you hit that subscribe button and turn on notifications so you don't miss out on future videos about building wealth. And remember, this video is for informational purposes only. We are not giving investment advice. Always do your own research and seek the advice of a licensed investment professional before making any investment decisions. All right, let's get right to it. Our first high-yield dividend champion is Enterprise Products Partners, trading under the ticker symbol EPD. With a juicy dividend yield of 6.41% and an annual dividend of $2.10 per share, this stock is a cash flow machine. Enterprise Products Partners is a midstream energy company, owning and operating pipelines, storage facilities, and transportation networks for natural gas, crude oil, and refined petroleum products. Think of them as the toll booths of the energy highway, collecting fees for every barrel or cubic foot of energy that flows through their infrastructure. Here's why EPD is a dividend investor's dream. First, their business is incredibly stable. Energy demand is relatively inelastic, meaning people and businesses still need energy regardless of economic conditions. This consistent demand translates into a predictable and reliable stream of revenue for EPD. EPD has an impressive track record of dividend payments with 25 consecutive years of dividend increases. It's like clockwork. Every quarter that dividend payment hits your account, ready to be reinvested or spent. EPD has an extensive network of pipelines and infrastructure across the United States, giving them a significant competitive advantage. It's not easy or cheap to build out such a vast network, which creates a high barrier to entry for potential competitors. This means EPD can maintain its market dominance and continue generating those sweet dividends for years to come. They have a conservative management team that prioritizes financial stability and dividend growth. They're not out there chasing risky ventures or taking on excessive debt. Instead, they focus on what they do best, operating their core business efficiently and returning value to shareholders. EPD is undervalued right now. The energy sector has been beaten down lately, creating a fantastic buying opportunity for savvy investors. It's like getting a discount on a high-quality dividend-paying machine. So, if you're looking for a stock that can provide you with a steady stream of passive income, look no further than Enterprise Products Partners. Just remember, this isn't about getting rich quick. It's about building lasting wealth through smart, dividend-focused investments. Now let's move on to our second dividend superstar, Pfizer, trading under the symbol PFE. This pharmaceutical giant boasts a hefty dividend yield of 6.57% and an annual dividend of $1.68 per share. Pfizer is a household name known for developing and manufacturing some of the world's most important vaccines and medications. From Lipitor for cholesterol to the Prevnar vaccine for pneumonia, Pfizer's products have touched countless lives worldwide. Pfizer is constantly innovating and expanding its product pipeline. They invest heavily in research and development, ensuring they stay at the forefront of medical advancements. This commitment to innovation translates into a steady stream of new drugs and therapies, driving revenue growth and strengthening their dividend payments. With a payout ratio of around 60%, Pfizer has ample room to maintain and even increase its dividend in the future. This means that as an investor, you can count on a growing stream of passive income from your Pfizer shares. Pfizer is a dividend aristocrat, an elite group of companies that have increased their dividend payments for at least 25 consecutive years. This prestigious title speaks volumes about Pfizer's financial strength and its commitment to rewarding shareholders. Pfizer has a massive global reach, distributing their products in over 170 countries. This vast network gives them a significant competitive advantage, allowing them to reach more patients and generate more revenue. Pfizer has a strong brand reputation and a loyal customer base. When doctors and patients trust a brand, they're more likely to choose its products. This brand loyalty creates a certain level of pricing power for Pfizer, allowing them to maintain healthy profit margins and continue rewarding shareholders. As people live longer, the demand for healthcare, including pharmaceuticals, will only continue to rise. This demographic trend provides a long-term tailwind for Pfizer's business, supporting future dividend growth. So if you're looking for a stable, high-yield dividend stock with a proven track record of success and a bright future, Pfizer should be at the top of your list. Investing in Pfizer isn't just about building wealth, it's about investing in a company that's making a real difference in the world. Finally, let's explore our third dividend powerhouse, Energy Transfer LP, trading under the symbol ET. This one comes with a jaw-dropping dividend yield of 6.75% and an annual dividend of $1.29 per share. Energy Transfer LP is a master limited partnership, or MLP, operating in the midstream energy sector, much like Enterprise Products Partners. They own and operate a vast network of pipelines, storage facilities, and processing plants, primarily for natural gas and crude oil. They play a critical role in transporting energy from production basins to refining centers and consumers. That sky-high dividend yield is simply too good to ignore. It's like getting paid a king's ransom just for holding their stock. ET has a long history of distribution growth. They've consistently increased their distributions for over a decade, demonstrating their commitment to rewarding unit holders. ET has a massive network of pipelines spanning over 114,000 miles across the United States. This extensive infrastructure gives them a significant competitive advantage, making it challenging for new players to enter the market. ET is strategically positioned to benefit from the increasing demand for natural gas. As the world transitions towards cleaner energy sources, natural gas is playing an increasingly important role. It's a cleaner burning alternative to coal and is used in various industries from power generation to manufacturing. ET is expanding its operations into new and exciting areas such as natural gas exports. The United States is becoming a major exporter of liquefied natural gas, or LNG, and ET is capitalizing on this trend by developing LNG export terminals. This strategic move opens up new revenue streams and strengthens their long-term growth prospects. The energy sector can be volatile, but ET's diversified asset base and long-term contracts provide a level of stability. They're not overly reliant on fluctuating commodity prices, which helps mitigate risk and ensures consistent cash flow to support those juicy distributions. So if you're looking for a high-yield dividend stock with growth potential and a compelling story, Energy Transfer LP should be on your radar. Just remember, high yields often come with higher volatility, so it's essential to do your due diligence and ensure ET aligns with your overall investment strategy. So there you have it, 3 ultra-safe, high-yield dividend stocks that can help pave your way to financial freedom. Remember, building wealth takes time, patience, and a solid investment strategy. If you enjoyed learning about these dividend-paying powerhouses and want to discover even more investment opportunities, make sure you check out the 2 videos popping up on your screen right now. Don't miss out. Click on one of those videos and keep building that financial empire. As always, thanks for watching, and we'll see you in the next video.